Guys, what's going on? Welcome back to the channel. In today's video, I want to do something special, which is how to size up a commercial loan, how to get it started, how to get it to the finish line. I'm going to give you a synopsis of something that I recently put together. It's a part-time commercial lender academy. It's available for you in the description of this video. I want to walk you through the steps. If you don't know who I am, my name is Zevi and I'm an owner of a mortgage company in Los Angeles, and this is what we do. All right, so if you're trying to figure this out, you're watching the perfect video. Adding commercial lending to your portfolio, especially as a residential lender, if that's what you do, is very powerful because it could literally skyrocket your commissions by at least 3 to 4 times. All right, you can make a lot more money doing this type of stuff. If you want to learn how to do it, this is a great video for you. In addition to it, if you enjoy my content and you like this video, please make sure to give it a thumbs up so other people like yourself can find it on the web. In addition to it, if you like my videos, please feel free to subscribe to the channel. I would really appreciate it. All right, with that, let's get started. Let's dive into it. All right, commercial lending, where do we start? Well, believe it or not, it's not that complicated. A borrower walks through the door, they want to know if they can get sized up for a commercial transaction. What do we do next? Well, just like a residential loan, we condition them for documents. However, we want to look back at the past 3 years of both the company and the individual. So in this case, what we would do is we would ask for 3 years of basically tax returns. All right, and we start to there. It's a great way to just figure out if whatever this person is trying to purchase even makes sense. And I'll tell you why. Because we could look at the amount of rent that they're currently paying, and if it's in line with the mortgage that we're going to size them up for and they're already paying for it, and at the bottom line of the company, especially if it's an S corp, you see that there is still a bunch of money that the company makes, which is the distribution to the owner, then that already tells us that there's a very good chance that this loan is going to qualify. All right, so that's kind of where we start. And then once we figure that out, then we're going to condition for everything else, just like a residential loan, meaning we're going to want a personal financial statement. In other words, a 1003, which is a mortgage application. And what does that do for us? Well, if you're in the business of lending, you know that it gives you the borrower's information, where they work, their income, their liquidity, meaning how much money they have in the bank to put towards this purchase, their schedule of real estate, meaning do they own other real estate, other commercial real estate? Is this going to be an owner deal or is this going to be an investment deal? It's completely different. The banks tend to like owner-user deals, and the reason is because they can take on the relationship of the business. When it's an investment, especially commercial, and there's no other relationship with the bank, then most banks are not going to be overly enthusiastic about putting this type of a deal together. Now, once we have all the borrower's information, it falls into 2 buckets, which is the business and the personal. Now, on the business side, we want to make sure that we cash flow the deal at least 1-to-1, meaning that if the proposed expense is going to be $1,000, we want to make sure the business makes at least $1,000, a 1-to-1, right? And on the personal side, it's got to be 1 to 1.25, meaning that once we pull in the owner's personal liabilities, in addition to the business, we want to make sure there's at least 25% more cash flow. So as an example, if you let me borrow money, you wanted to make sure that I at least make an extra 25% in addition to the $1,000 that I owe you every single month. So say I make $1,250 to know that you could actually get paid. Once we have established this, the lender can issue something called an LOI. And an LOI is a letter of interest, LOI. And it would actually outline the terms. All right? Now, if the borrower likes the terms, then we can go ahead and have him sign it. Once he does, we can initiate the transaction and go through it A through Z like we would a residential transaction, except there's 2 parts to it. The first part was the financials. Okay? Once we got through the financials, which typically takes, I would say, at least 2 to 3 weeks. Then we move on to the third-party reports. This tends to take another 3 to 4 weeks. Once we have both of those pieces together, then we can push this file to docs, all right? And there are a variety of ways to protect yourself to make sure that you earn a commission here. In addition to it, you don't want to spend money on third-party reports until you know that the deal qualifies. If this sparks your interest in any capacity, and now it doesn't matter what kind of a deal it is, whether it's an owner-user, whether it's a multifamily play, retail, hospitality, or medical, this basically covers everything. In addition to where you would actually find the lenders to be able to do these deals. All that is available for you via link to the Part-Time Commercial Lender Academy. It goes through everything, 20 module, 20 sub-modules. You could spend hours with me on video specifically explaining to you how to go through to do this A through Z, which could potentially take your income from where it is today to a significantly different place tomorrow, all right? Hopefully you enjoyed this video. If you did, please give it a thumbs up, again, so other people like yourself can find it on the web. If you want to see more videos like this in the future, please subscribe to my channel. Of course, I appreciate you being here and watching this. If you want to learn more, then please check out the Part-Time Commercial Lender Academy in the description. I look forward to seeing you again on my next video. Thank you for watching and take care.